Profiting from a downward market, also known as bearish market conditions, requires adopting specific strategies to capitalize on declining asset prices. Here are some ways to profit during a downward market. Short selling. Short selling involves borrowing shares of a stock from a broker and selling them on the market with the expectation that the price will fall. Later, you buy back the shares at a lower price, return them to the broker, and pocket the difference as profit. Put options. Purchasing put options gives you the right to sell a specific asset at a predetermined price within a specified time frame. As the asset's price declines, the value of the put option increases, allowing you to sell the asset at a higher price than the market value. Inverse ETFs invest in inverse exchange-traded funds that are designed to profit from declines in specific market indices or sectors. These ETFs use derivatives or short positions to achieve returns that move opposite to the underlying index. Cash and defensive assets. Hold cash or invest in defensive assets like bonds, gold, or defensive stocks that tend to perform well during market downturns. Market timing. Utilize technical analysis or market indicators to identify trends and anticipate market reversals. Adjust your investment allocation or trading strategies accordingly to profit from downward movements.